welcome to this episode of Tea Time. I'm Chaiti Narula and joining you this time from Mumbai. Joining me on the show today is the managing director and founder of a company that started off as a commodities company in the year 1986. It was a 6 crore turnover company. From then to now, raking an annual turnover of nearly 30,000 crore rupees, this company has come a long way. The founder and managing director of Ruchi Soya, Mr. Dinesh Shahra, joins me on Tea Time today.
On the show this week, we have Dinesh Shahra, founder and MD, Ruchi Soya Industries.
Ukraine crisis is mostly in the eastern part, the Crimea, and the supplies and manufacturing in the western part. So I don't expect any problems.
Wwatch wins by 3 shots to claim his second green jacket in 3 years. And Carlos Ortiz wins his second Web.com tour victory of the season.
Mr. Dinesh Shahra, welcome to Tea Time. Indeed lovely to have you here today.
Nice to meet you.
So when did you really take on to golf? I believe you're a beginner. What led you to take on to this game?
You know, my work life has always been in a fast pace and consuming. So I was always looking for something which can unlock me.
Right.
And I found golf as a very soothing game.
Right.
It is with a low pace environment.
Correct.
And self-motivating.
Sure.
And also it connects me to the business environment. I find a lot of principles in golf are reflected of the business.
Okay, so let's start talking about your business a little bit now. There is an increase in and a rising preference for sunflower oil as a cooking medium. Is that what has led to Ruchi Soya really get into the South Indian geographies for sunflower oil?
See, sunflower oil has been a well accepted cooking media in South India, and Ruchi is its brand. Ruchi Gold is the largest selling cooking oil brand in South for the palm category.
Right.
We are India's #1 cooking oil brand. And sunflower oil this year is a very challenging year because sunflower prices have come down substantially. It is almost priced around the crude palm oil prices.
Correct.
Normally it is $150 to $300 per ton premium.
Right.
So we are refocusing on this strategy of brand. We want to expand the volumes almost 2 to 3 times, and we have relaunched as a clearer, healthier, and a tastier product. And it's a low absorbent and high tech project. So we are very excited about this sunflower, and we are excited about the sunflower opportunity in India.
You know, the import with regards to sunflower oil, do you peg it to be recording a record high anytime soon at the moment?
This year we expect that there will be a lot of shift of palm oil to sunflower oil and soybean oil. And
the consumption
of it will switch from these two oils,
right,
because it's the best cooking media and priced very economically.
Yeah, absolutely.
So I think we are expecting that last year we imported almost about 900,000 tons, and we expect this year that this may go to 1.5 million tons.
Oh, really? So
almost 60% higher than last year.
Now, there is the political unrest in Ukraine that all of us are aware of. Is that somewhere likely to impact the import of this sunflower oil as well?
Of late, in last few years, Ukraine has become the largest supplier of sunflower oil.
Sure.
And because of this year, the low prices, this is going to be imported the most. And the Ukraine crisis is mostly in the eastern part, the Crimea.
Right.
And the supplies and manufacturing in the western part. So I don't expect any problems. And moreover, the farmers are getting almost there is a devaluation. I mean, there is a weakness
Right.
in the local currency, about 40%. So the farmers are getting the best price. That's why it is cheaper also. So I don't expect any problem because of this unrest in
Ukraine. All right. On that note, let me tee off and we continue our conversation.
Surely. Well done.
So now let's get your estimate now on the edible oil estimates. What does your estimate look like for the year going forward in terms of consumption?
India traditionally, we have a population growth 4%, and we have income growth in middle class. So we expect 4 to 5% annual growth
Right.
every year.
Right.
So this year we are also expecting the same growth,
Right.
and India produces almost 7 million tons of local oils. So we are expecting almost close to 10.5 million tons
Correct.
of imported oils, and they'll be switched from palm oil to sunflower and soybean oil, as I explained to you,
Right.
because they are cheaper than the palm,
Right.
or same the price.
Right.
So there'll be a 4 to 5% growth.
You know, commodity business is something that the government is increasingly looking at acquiring themselves as well. Why do you think, what has led to a trend like this?
There is a huge concern of food security worldwide,
Right.
and consuming countries like China, their government company called COFCO has been the largest
Correct.
company who acquires the business, and they are also operating in the businesses, and they participate in warehousing and all that. So recently it has been talked that they have bought Nidera, which is the large company which originates from South America,
Right.
and then they are looking at Noble, which has many plants in South America and plants in China, and they are putting a high valuation. And recently you must have heard Temasek.
Temasek. Yes.
Temasek took their stake from 26% to almost 74%,
Correct.
open offer.
Right.
So it shows the importance of these companies who are engaged in commodity origination, and who are equipped with risk management and supply chain, and they are getting a huge valuation. So I must say that Ruchi Soya is India's largest agribusiness company, and who has almost capacity of palm refining among the first top 5 companies in the world.
You know, we're going to go over your capacity utilization in your plants a little more in detail. We'll also go over the joint venture that you had with Hendrix International recently as well. But it's a good time now for us to take a break right here on Tea Time. On the other side, this and more follows, so don't go anywhere. Thank you for staying with us on Tea Time, and welcome back. We're in conversation with the Managing Director and Founder of Ruchi Soya, Mr. Dinesh Shahra. Mr. Shahra, we were discussing about your joint venture with Hendrix International, which happened recently. What has led to this JV?
Ruchi Soya is India's largest soybean crusher.
Right.
And there was a great issue with the Indian farmer. The soybean seed yields in India are almost over 1 ton per hectare, and worldwide it is almost 2.5 tons per hectare. So Ruchi's desire was to make sure that how can we increase the crop, maintaining the non-GM status, though there is a myth in the world that only GM crops can be high yielding.
Absolutely.
But there was a company in Canada who is a very research based. They are engaged in producing soybean seed of non-GM variety,
Non-GM
with a
yes.
yield of almost 3 to 3.2 per ton per hectare. We approached them, we saw their research, our representative visited Canada, and we formed a joint venture for India now. So this will enable to produce high yielding soybean seed of non-GM variety, and that will increase the crop, which is almost about 10 to 11 million tons, can go up to almost 30% higher.
Okay,
so it will serve 2 purposes. It will give better income to the Indian farmer,
right,
as well as it will supply more soybean seed to the crushing plant, which are underutilized.
Now let's go over the change in import patterns a little bit in terms of edible oil, there has been a surge that we are witnessing all of a sudden. This has somewhere also affected the refining capacity utilization as well. We are also seeing a margin compression with regards to that. How long do you think will the industry will take to be resilient and come out of a deep crisis like this one?
Surely for last 1.5 years, the Indian government policies were with the view of inflation.
Sure.
Inflation was at the back of the mind. They thought allowing refined oil import will curtail the inflation. So they had made the differential. As in Indonesia, it was almost $100 to $120 differential between crude and refined. In India, it was only about less than $40.
Sure.
5%. So the Indian industry, which was almost virtually under a very low capacity utilization, and they were losing money. Indian industry has represented the government. Government always said that we have inflation problem. But now I think after these elections are over, the government will rationalize. I must say that because of this duty, Indonesian industry made almost $100, $120 per ton at the cost of Indian refiners. So government cannot afford any policy which are against the domestic industry. So we are quite hopeful that government should look into this aspect now.
You think the policies are likely to change?
Surely.
Given we're
because
in such
why
huge
should the
crisis?
refinery capacity come in Indonesia at the cost of India?
Absolutely.
We are India's world largest importer of palm oil,
Right.
and there are so many workers employed. It is a huge capacity. Our utilization is hardly 30%. So I think we are quite hopeful government should rationalize, and they should put some anti-dumping duties, or they should increase the differential from crude to refined by almost 12.5%.
Now, every increase in income obviously translates into an increase in consumption, and here we're talking about edible cooking oil as well. We have seen the consumption in India overtake the supply really, and there is a worsening dependence on imports. Is that a huge concern for India at the moment?
Surely. I would say as a food security, India still is at a very low per capita consumption. We are at 13 to 14 when the world average is 22. So government is putting a lot of initiatives. Recently, they have promoting Indian palm plantation. They are doing a lot of schemes where the yields of the oilseed crop can increase.
Sure.
And we are participating in the movement of Indian palm plantation.
Right.
Almost they have identified 1 million hectares of palm land, which can, if done properly with contract farming module, it will benefit the farmers, and increase. It can go almost 3 to 4 million tons of local oils. So that's a great move by India, but there is a concern that yes, we can't be overly dependent on the imported oil.
On that note, let's continue our game. Come.
Surely.
Now, would you agree that the government's policy towards the vegetable oil sector has not been kind to India at all?
Yes, it is. This industry was not being recognized by the government, so they are always under the tremendous pressure of inflation.
Right.
And they feel that edible oil prices, cooking oil is a very important component of anybody's life. So that's a concern, but I think we are almost at 60-65% of imports. India can't afford to be so much dependent on foreign companies.
Absolutely.
So they should make sure that there are policies which can be formed so that the industry is being looked, because this is a very major, I would say, industry, and they should learn the lesson that why can't it, when we have got grain self-sufficiency, in wheat we are at the world levels of yields, we have exports from wheat,
why not
rice,
vegetable
why
oil?
not vegetable oils?
Right.
So I think a pragmatic approach needs to be done by government.
But are companies like you also entering into some sort of a dialogue to make the government
and
realize this?
The purpose of this joint venture in seed was only to show to the government that look guys, there are companies who can improve your yield by almost 2 to 3 times.
Correct.
And 11 million tons crop, if done well, with proper subsidies and all that, it can go to, why not 22 million tons?
Sure. All right, I'll continue with my game and we continue our conversation then. So let's talk about other commodities a little bit now. In the past, we have seen that edible oil is the only important food commodity in the country which is not grown as much as your rice, your wheat, your pulses, so on and so forth. Do you see somewhere a trend changing in the near future this year?
We have no choice as a country because we can't afford to be 60 to 70% imports. So the palm initiatives or giving high yielding varieties to rapeseed and cotton is of course is also increasing.
Right.
So I think we have to be at least curtail the imports and we have to become self-sufficient in the course of time.
Right.
So there is always a talk that why oil seed, why not grains?
Correct.
But as a country, we have to balance the situation.
Well, we will be talking about your focus in India, your footprint and your strategy going forward as well at Ruchi Soya. But it's a good time now for us to take a quick breather right here on Tea Time. Mr. Shahra and I will see you on the other side. Don't go anywhere. Thank you for staying with us on Tea Time and welcome back. On this segment, we will track Mr. Dinesh Shahra down as an entrepreneur actually. 1986 rather, when you started off the company at 6 crore turnover.
Yeah.
You were talking to me offline about it. Today it is clocking in a turnover of 30,000 thereabout crore rupees, growing 20% year on year. How do you manage this? What is your strategy? You started off as a commodities business, today one of the leading FMCG players in the market. What has been your core strategy like to take this company to where it is today as an entrepreneur?
See, prior to 1992-93, India was a closed door economy. All high prices, low consumption, government controlled. And after 92-93, the message to Indian entrepreneurs was very clear. All open policy, world levels of plants, competitive market. So we concentrated on this economic reforms. We set up the global size of plants. We had set up the best of the assets across the port. Earlier, prior to 92, the biggest plant was 100 tons or 200 tons a day. Now we have 3,000 tons per day of refining. Those are the scales we achieved. Going forward, Ruchi is looking at brand building because we have achieved a good size. We want to increase our EBITDA margins almost 2 times from the current level of 4%. We want to increase to 8 to 10%.
Right.
For doing this, we have recently formed 3 joint ventures. One for the soybean seed, and 2 we have formed with Kagome is the world 3rd largest tomato producer and number 1 in Japan.
Okay.
And a company called Mitsui.
Right.
Mitsui is a large trading house.
Right.
And another joint venture is J Oil with Japan. They are the number 1 Japanese companies. And so we want to increase the margins on our brand building business. So we opted for them. So going forward, we want to focus on brand building.
Correct.
And increasing awareness of our product.
You know, your mantra
And
as...
surely, I must say that organization. We hired 2 expatriates, the commercial director and risk management head. And then we have a chief operating officer. So the entire organization is going to be under large professionalization.
Mr. Shahra, you have always treaded on a very fearless path as an entrepreneur. Do you think being fearless is what has led you to be this successful today as an entrepreneur? Or is there another attribute that you have?
No, I must say that that's the inspiration I got from my father.
Right.
He said that if you want to achieve in your life, you have to be fearless. You have to make sure that you understand the business and do job with full conviction. And unless you have full conviction, you can't achieve your goals. So I believe in something which is on the platform of full courage and no fear.
Let's talk about the Dinesh Shahra Foundation, which is your corporate social responsibility per se. What is really the foundation focusing on at the moment? And what was the whole idea behind you conceiving a foundation of this nature?
Dinesh Shahra Foundation has been recently formed by me. I wish to give part of my wealth to this foundation.
Right.
I have two personal things which I believe in cow slaughter and I believe in vegetarianism. And on the corporate level, we would like to look at the farmer. Farmer has been very dear to us. Entire our business is strategized on the well-being of a farmer. How do we increase the income of farmer? That's why you see this joint venture also.
Right.
And when we create value for agri-produce through branding or exports or distribution, we create a value for the agri-produce.
Correct.
So we want to invest money in R&D and women empowerment, rural empowerment.
All right. On that note, let's finish our game and we continue our discussion. Come. All right. Lovely. Well played. Well played.
Thank you very much.
Now, on the winding note, let's get to know about Ruchi Soya. Next big thing at Ruchi Soya this year.
We are very bullish about Ruchi Soya as a company and the business we are in. We have great brands.
Sure.
Ruchi Gold is the largest cooking oil brand. Mahakosh is in all cooking range for value for money.
Right.
And Sunrich has been relaunched.
Right.
Nutrela stands for nutrition.
So the slogan, of course, of Nutrela is something that you follow in life as well?
Yes. Nutrela stands for nutrition and it has a slogan of live healthy and live happy.
Right.
And I think that's the thing which I want to follow in my life also.
Well, that's wonderful. On that note, thank you so much for joining me
and
playing this hole with me and joining me on the green as well. Lovely talking to you. On that note, it's a wrap on this episode of Tea Time with me, Chaiti Narula. I will see you next week again. Until then, enjoy the flight of a good drive.